Well, hello, folks. Hey, it is Shooter. Welcome to Swing Trade Notes. Of course, at the end of our presentation, please do review our disclosure. Now, last week was a funky week. That little ASML I thought it was going to royally screw up my week, and I actually ended up landing on my feet. We always love that. So we ended up about $8 a contract in total for the week. Which, to be frank, that's one of the reasons I took AST Space Global, because I was seeing a little pullback to about 27.90 or $28. And, I wanted to roll up anyway, so I took advantage. Being candid, we've got Peloton, I guess is the name of the actual product, looking for 650 calls, by the end of October. Then we did the AST Space Global $40 calls for February 25. And then RKT we threw in there with $20 calls. Then we added some VIX. Now, I'll explain the VIX just for a second. The election is coming up. On top of that, we have OpX coming in for the end of the month. And a couple things are going to roll. So the likelihood that after, I think it was 6 straight green days, right, that we run another 2 weeks of straight green days was slim. So I went in with a quarter position because I want to have a little more than a full position size on going into the election. And that's why I went with November 15th, because obviously everybody votes by the 5th, November 5th. We're going to know what the outcome is, and I would expect some volatility. So this is more of a hedge for me. Just wanted to share that with you because I do want to have some exposure there. I still want to carry my longs, but at the same time, I want to have some exposure, and I think it's viable. We could still pump with a large number of stocks, and then the indices turn south, and obviously that would pump the VIX. So, all right. We're looking at October, the week of October 21st, ending the October 28th. Now, I think 22% of the S&P reports this week and 14% of the NASDAQ. So we got a lot reporting. Now, I'm really intrigued with a lot of these. However, history teaches me about earnings is that the number of times you can be right versus wrong, unless you take smaller positions, requires one heck of a lot more work and research and understanding macro and micro. And that's not something I do, okay? I am solely a technical guy. I take the setup and I run. So if I see a setup, maybe I'll run, okay? So what I see here is continuation. I see GM, Coca-Cola, Boeing possibly flushing, right? However, their order numbers, I actually went and looked at their order book. They are higher than they were in 2023. Okay, so maybe they did pretty well, and specifically in deliveries. Now, their order book is a little lighter than it was in 2023 percentage-wise. So, I really want to watch Boeing, for the downside, just like I want to watch Tesla for the downside. We should see a tell going into earnings like 48 hours before on what Tesla does. If it's going to pump, they're going to start Monday, and it's not going to stop all the week till earnings. If it doesn't pump, the bias is that they have bad reporting. That's really sort of my thought. Now, this week, and the rest of the year, we're going to try and focus on my theses, not necessarily my impulse, because I find my theses on stocks are much more accurate than my impulse. So, that said, I like Newmont, but the setup wasn't there, at least for me in what I like. End phase, I like it, but the setup wasn't there for what I like. I also like Tractor Supply, except for retail. A couple of them were a little bumpy, so I don't want to go there. UPS was weak, or guided lower. If they don't guide lower and they beat on both ends of this, it will pop. It will pop. NASDAQ, I think, is bullish. I even like LKQ, but again, I didn't have any of the setups I like on those, so we didn't include those in our work. All right, so very tight box. Continuations, ROKU, StubX, Lulu, Meta, and business. That's what I'm looking, all right? From a continuation standpoint, or my continuation piece, the only 50% back play that I liked was CleanSpark, right? So let's start off, look at SubX, continuation above. So right now, I'm just looking for a pop to $100, get my $4 out of this sucker and go to the next. That's what I'm looking for. If it really pumps into earnings and we get above the 61.8, I'm still holding it. yeah, I might take some pieces and holding it, but the idea is to close it. October 30th, after the close, is winner. All right. Next is ROKU. Similar look into the gap, 87.32. I like that move. Nice move. $7. Could move with earnings for sure. So again, I want to watch that. Again, not giving it a lot of room. Roughly 76.16. I'm going to be out unless I had a great week. And then in that scenario, just so you guys understand my thought pattern, if I'm consistently winning and I'm booking profits on every single trade and I'm up, I'm right 100% of the time. Quite often when I trim, I'm only going to trim half the position. However, if my win-loss rate is way the heck down below 70%, then I'm going to cut it because I don't want to take on the additional risk. Now, of course, that's based on my P&L. I look at that weekly, monthly, quarterly, and annually. So once I get close to that weekly loss in total, I'm going to be trimming on any weakness because I want to manage that aggressive, especially going into this later part of the year, because we've had a decent year in total. So, all right, let's take a look at, again, December, 85 calls on ROKU. Earnings is the 30th as well after the close. So those just, timing was perfect for a week run. If they're going to run, we got time to hold on to these the whole week. So, all right, CleanSpark. Now, actually, I was watching this for about 3 weeks. I was watching it here. And what I didn't like was that the volume hadn't come in. And I don't know why I didn't look at it since then. I looked at it about here. Had one decent candle or whatever it was at the time. We've had now 1, 2, 3, 4, 5, 6, 7 daily candles. So the entire week it ran and I didn't have these. That always ticks me off. Now, so the reason I'm only giving it 11.24 is we got a gap right here. We need to get above the gap. We're not into that gap yet. We're right at the gap line. So I expect it to pop above there. I expect this just to run into earnings because there was a lot of call options on this. So I would see no reason we don't get to our $16. Now it's only about $3.50 on the move, but for a $15, $16 stock, it's good. I liked the December $15 calls because I didn't like the spread on the other one. So that's what we're going. But that's what we have for this week, folks. Great trading until next time.